Hello friends, welcome to my channel and thanks for watching this video, and most welcome to another series of USA weekly market report. Now the last week or in the past 2 or 3 weeks, most specifically we are talking about the corporate results. It's been good and we have seen lot of outperformance. More specifically, if you're looking at the banks, they have performed quite well, but there are lots of interesting developments that are happening across the globe. Obviously, US will be the center stage and is the center stage. Now there is lots of things that are going on. So we will focus on that. Apart from that, we will do our usual preparation for the next week or the upcoming week. Now, so the first thing is about the US inflation. Now the US inflation, as you can see, US inflation notches a fresh 30-year high as measured by the Feb's gauge. Now let me show you one chart. So this is the inflation data and this is the last 25 years. As you can see, in the last 25 years it is at the highest. So the current we have here is 5.4. So in the past 25 it is at the highest, or the last time we have seen such inflation was in 2007 and 8. Now that time the situation was different, this time is different. And let's go to the chart, line chart here. And as you can see, post 1980 we have seen an inflation in between near to 0 and 6. Okay, so whether this will continue or not is a big question, because once it started moving beyond 6 or 7, there will be a huge amount of pressure that the government as well as the central bank will probably face. Let's see what's there. Let's go through the headlines. So headline: inflation including food and energy rose at a 4.4% annual rate in September. So it is the fastest since 1991. The core inflation increased 3.6% for the 12 months, the same as in August, but still also the fastest pace in the past 30 years. Personal income declined at a faster pace than expected, while consumer spending increased and was in line with forecast. And employment cost rose more than expected at the fastest annual pace in 19 years. Now, the major driving factor behind all these things is liquidity. Definitely, when we have liquidity which is more than what you required, or we don't know what is the requirement yet, because the requirement keeps on increasing, whereas the people keeps on at they are at the same pace, or they are declining. When I'm saying declining, it means the working population or the kind of jobs you are producing. So what we can see in the stock market is different from what is actually there in the main economy. Okay, so this is one important factor which you need to look at. Apart from this, so these situations will evolve over a period of time, and once it takes grip across the economy as well as in the stock market, you will see the momentum in increase and increase in a much faster way. Now, the next important thing that one could probably look at is this news. The market could be challenged in the week ahead as the Fed prepares to reverse easy policy, and Bill Ackman calls for the Fed to start raising interest rate as soon as possible. So there are two different things. Okay, one is the tapering, another is the rising of interest rate. So the potential damage could happen because of interest rate and not because of the tapering. That is the first point. And secondly, we will see the rate or the pace at which the interest rate is moving or will probably move. So here we are. So the Federal Reserve is expected to announce its first big step away from the extraordinary easing policies it put in place to fight the pandemic, but the market may react more to what it has to say about more persistent inflation. And the October employment report Friday could show some improvement in hiring as new cases of COVID-19 continue to decline. Okay, so this is the first thing, and let's go to the another reviews. So, billionaire hedge fund manager Bill Ackman called for the Fed to raise interest rate and start cutting its monthly asset purchases immediately. We are continuing to dance while the music is playing, and it is the time to turn down the music and settle down. And Ackman's Pershing Square is underperforming the S&P 500 this year after a stellar 2020 run. So, even if we ignore this press release because economy or central banks, I don't know how much or which corporates has major impact on them. So even though we lower down this press release, but the thing is, this is an important point. You have to think because last time the situation was different, and this time, if the interest rate, if the inflation keeps on rising, you must, you have no tools left at that point, and you will definitely use interest rate as a tool, and you will increase it significantly. And we have seen so the miscalculations that has happened, and the fall which we have seen in the year 2008. So I don't want to show or say something about a doomsday prediction. So this is not about that market will expand and market will decline or contract. So this is that kind of thing. So the one gist or the summary which we can get out of it is what market is doing and what central bank or the situation in front of the central bank and what it may cause as far as the stock market is concerned going forward. So these are two important situations that markets need to face, or probably we are talking about stock market. So it need to face. Now Dow Jones closed positive, Nasdaq, S&P, everything is in green. Oil is stable. US 10-year yield is stable. Now even yield is not impacting much as far as the market is concerned, because yield is something which is moving like a stock nowadays. So these kind of things are not usual. These are unusual things that are happening. Apart from that, natural gas, although moved quite drastically, but it is near to the highs, I would say. It is very near to the highs, and after lots and lots of volatility, as you can see over here, so the high that it has made was 6.2, low was near to 4.9, and it is still trading at 5.5. So it is near to the high, and it's been consolidating. So uh, if the commodity is in bull cycle, so we are not yet, or we are very very close to the highs. Just understand this thing, and the uptrend is not yet over. The surprising fact is US dollar index, and in the last trading session of Friday 29th October 2021, we have seen a sharp increase in the price or in the chart of dollar index, and it moved quite significantly. Let's see whether we can get that as far as this chart is concerned. So this is the daily chart. So as you can see, okay, this is the 1 day chart. Let's see, or 5 days. Yeah, here we are. So as you can see, there is a sharp jump that we have seen and this is probably because of the upcoming events. This is definitely have the upcoming events definitely have an impact on dollar index. So let's start with dollar index itself and let's see how or what is the situation that we can see. So I was already checking this thing, and you can see it has started taking support. So there are some signs, and last time we have seen that the dollar moved in a bearish way, and the stock market rally that we have seen in 2004 and 7. So that part was different. Now in this part, the lower end of the range sustains in between 89.67 and 88.38. Surprising factor is it is holding above 93.49. It retested its support, or this was the resistance. Now after the breakout, it retested its support and it sustains above 93.49. So the next target we will probably get here is near to 9 or in between 95.29 or 90, in between 95 and 96. Once dollar index started crossing, or if it sustains above 96, definitely a big range will open up, and the next two targets beyond 96 will be 100 and 103. So this is quite damaging, or this will definitely be quite damaging for the markets going forward. Okay, because we have seen the implications in 2020 till see here till 2020 March, and after that we have seen how stock market moved from there. So if it moves toward March 2020, the level or in between 100 and 103, it will be quite damaging for the stock market. That is the first thing. Now let's go to the index chart and let's see what's happening over there. So this is the chart of Dow Jones. Now Dow Jones has one advantage because there are lots of old economy stock and brick and mortar business over here. So the impact of interest rate probably or is negative for some of the companies. So this is a surprising factor you will see, because the negative impact is clearly visible on Nasdaq, but whenever bond yield rises, you will see the Nasdaq will move down and Dow Jones sustains its gain. So this is a sign that you can see over here. So this is the chart of Dow Jones, as you can see over here. Now for Dow Jones, it is technically a breakout that has already happened. Let me first show you that. So here we are. Okay, so there is a breakout that has happened, but understand one thing: the kind of volatility we are having in the market right now. So you must maintain a strict stop loss. Uh, you can't be a person right now who is looking one-sided, or who will look for one-side move either on the upside or on the downside, because we are talking, or because we are updating things on weekly basis. So at least right now we have a short-term duration. Okay, and that's what we are specifically looking into. So you need to be very much sure about the level. So now 35,650, this is the level what you need to look at, and this is the breakout when the Dow Jones started moving above 35,650. It went up, went down, and again it went up, so reconfirmed its level. So by the time it sustained above 35,650, the uptrend is here. But there is another way to look at it, because we will see probably all the multiple options that we are having here. So if I draw a line like this, in that case the resistance will be here 36,122 rather than 35,650. So now the range between 35,650 and 36,120 or 130, this is the zone in between which we have to see the price action of Dow Jones, and if it is not satisfying, or once it started moving below 35,600, you have 34,160, you have 33,838, and you have 33,600. So this is the range, and I think the range is still there. Still, the entire range is still active, even though there is a breakout above 35,650, for the simple reason that we are heading for a very big event going forward, and we have to see how the market will respond, probably respond to those events. Now, talking about the Nasdaq, here we are. So Nasdaq has indeed made its breakout, so it moved when compared to its previous high. Now, one more thing, those who remember, or those who are in the market, or those who remember 2003 to 2007 move, they do know when the Fed started talking about tapering, and when they actually started doing this, the market shoots up in a much quicker way. So that is also a reality. Okay, and here we can see the talk has been going on for the last 3 or 4 months, and as you can see, there are big swings, but how the market is responding, and it is very much clear that Nasdaq, so it hits its previous high in the month of September, and that was 15,424.30, and right now it is trading at 15,497, or nearly 15,500. So here also we will see, or we can see how the index has responded, and there is definitely some positive moves, but with this we are very near to the upper end of the range, and it will be in between 15,970 and 16,100, or 16,000, I think 200. Okay, 130. So this is the range that we are looking at as far as the upside is concerned. And if you are talking about the trend, so this is the first, second, third, fourth, and we are in the fifth leg of this uptrend, okay, in this range, because after five move, we will probably see some downside move like this. This is also a possibility. This is also indeed a possibility. So that we will see later on, but now you can see it is clearly visible in front of you how the index is moving, or has been moving. We have quite a strength in all the major indices, and cumulative impact on S&P 500. Now let's go to the yield. So let's see how it's been moving. Now it is clearly visible that the moves are not normal here, and when, so this is the 10-year yield, and it has its impact, and as you can see, it is the chart. So if you are looking at this chart, as you can see, the chart is very much comfortable, and it is holding its support. So it's very important to see if you have a chart like this, and definitely it's an uptrending chart even in the short run. So what we have here is your support or stop loss at 1.4, but the kind of movement it is indicating, because this is a very clear and simple chart, okay, there is nothing so difficulties, or you will see some sort of the chart is not looking clear or something like this. So nothing is like that, and the US 10-year is very near to its previous high of 1.81, 1.82, and once it started moving above that, so the swing will probably push it towards or in between 4.3 and 5.7. So this is how the swing looks like, and if it indeed moves in the way which it is indicating right now, so it will be a very big swing, because we should not calculate the percentage of percentage, but this is like 180%. So it is like 1800 basis points, nearly 1800 basis points. So this does not looks very comforting right now. Okay, so we have two things that we need to look at, and added to that, when the commodity is in bull run, because uh, the commodity is in bull run, that is fine, but in 2003 or 7 or 8, the liquidity is there. Definitely the liquidity was there at that time, and that there are some common factors which has driven the 2003 and 7 rally. This time is also the same, but this time the kind of liquidity we have is threatening the inflation, and it is pushing the inflation beyond a certain amount of point. So when the liquidity keeps on increasing, and sometime you will fall in a trap where inflation is persistent, and it is moving near to 1980s. So we have to see how the situation was there in 1980s. So let's go and check it out, because when I'm talking or when I'm discussing with you, this is just a point which uh, came into my mind. And let's see uh, how Dow Jones has moved in 1980s, if we have the data for that. So here we are. So this is 1980, 1980, where Dow Jones made a top, and in 1982 it made a bottom. So as far as the moves are concerned, so it is around 25% worth of correction that has happened in 1980s. Let's go to Nasdaq and see do we have the data for Nasdaq or not in 1980s. Yeah, we do have. So I think it is the same. It is the same. So this is 1981. So the high was made, and 1982 it is also 25% worth of correction. So a correction is there, and when I'm talking about 1980, so it is from this chart. As you can see, the last time the inflation went up to 10 or 15%, it happened in 1980. So that's why I'm considering this situation as well. We have to see, yeah, if it started falling down uh, right now, or at least after touching the high of 6.5, that's a different thing. But if it moves beyond 6.5 or 7, it will definitely be a problem. Okay, the things which is pushing uh, the overall inflation, and as you can see, the rest of the things is definitely commodities, and commodities is something. So this is natural gas, and although people forget about natural gas, because market memory, the people memory in the market is very limited, and they don't think beyond a certain amount of time. But understand this, natural gas is holding its breakout level. Okay, 5 is the level, uh, and this was the breakout level. It went up to 6.4, but it is comfortably trading at 5.4. So I'm talking about natural gas futures. So this is the futures chart. So this is the range in between which natural gas is currently trading, 5 and 6.4. And understand this thing, that we are heading towards winter, and winters cause, we are in a commodity bull run. There is a crunch, there is definitely a crunch in the energy prices, or definitely in energy product, and countries where we have extreme cold situations will definitely face the problem. And technically, if the natural gas moves beyond 6.5, it has a capability, because we are in a market. So beyond 6.5 the range will open, and the next target beyond 6.5 will be 9.9, and we have 11, and we have 13.7. So all these levels are possible, and these are the levels that natural gas future has seen in the year 2005 and 2008. So be mindful of the fact that this is not the end of the commodity bull run, and we are just taking rest. You're talking about natural gas also. Let's check out the crude. So this is the crude futures, and as you can comfortably see, we feel happy whenever there is a pause, and you can see how market started sharing those things. But you need to understand the cycle, and you need to understand the price movement, and by the time, or if so, this is also the futures chart of WTI crude. So if it continues to sustain above 77, uh, the next big target will definitely be, so WTI futures will definitely be near or more than 100. So everybody is talking about the three digits, but there is nothing called a level which is 100. So the next target beyond or above 77 is in between 106 and 114. So be mindful of this fact, and also the higher end of the range is 147. So we have lot to cover. We definitely have lot to cover. So now this part, this part in happens in between 2007 and 8. So this is just because of market, and this has happened because of demand. Okay, so do not, this is because of a market move to extreme across the globe, but on an average 106 and 114 is the level that you need to look at. Also, let's go and check out silver futures. Why I'm saying this is there has been enough consolidation that we have seen in the price of gold and silver, and if commodities started moving higher, and will definitely move higher going forward, then gold and silver will not be the last one. Okay, they are the one who will give you stable returns over a period of time. So as you can see, silver is sustaining above 21 and 22.3. So this is silver future chart. So if this sustainability continues, what we have here is two specific targets. So the recent high is 30.31, nearly 31, and beyond 31 we have 35, and beyond 35 we have 44, and we have 49 or 50 on the upside. So this is quite a possibility, at least for the silver, and beyond 50 a big range will open up, that we will talk later on. So if so, one thing which is very much available on the chart is the expansion. Okay, either you're talking about the yield, you are talking about oil, you are talking about natural gas, you're talking about silver. Expansion in the chart is clearly visible, which means whatever is going to happen, the volatility will be at the peak, either on the upside or on the downside. So it's very tricky situation going forward, and if you want to participate in this kind of situation, you need to be prepared yourself, and you must have a plan of entry as well as exit. So with this note, I want to end up this discussion, or I want to summarize the so there is no summary left. I have explained all the things. So this is the end of the video here. So be a bit more cautious on the upside. We have a little bit of a room in both Dow Jones and Nasdaq, and as far as the commodities are concerned, they are just uh, taken the pause. It is not the end, and two important things that we are going to look at are dollar index and bond yield, and they are looking super strong right now. So we have to see how they are going to respond on the upcoming events or major upcoming events going forward. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.